Hi guys, so in this video we're going to talk about fair value gaps, and in this video it might be a longer one because I personally use fair value gaps a lot more than I use other concepts, and it's because I watched this YouTuber called I'm actually not sure how to pronounce his name, but it's Arjo. But yeah, so basically I'll link his YouTube in the description below because his videos are actually really good and they help me decide how to use fair value gaps and how to know which one. Because fair value gaps is, so basically we'll just go into it, but this video will talk about what fair value gaps is, how to use them, strong versus weak fair value gaps, and we'll also talk about why I used to use fair value gaps the wrong way. Yeah, so first of all, what they are, and fair value gaps are the most easiest pattern to recognize, and I think that's why I like fair value gaps the most, because fair value gaps is basically like they just jump straight at you, they're just imbalances. Fair value gaps is basically a 3 candle pattern. A bullish one is one right here, you can see an example right here. So it's when 3 candles are like this, and the second one have a space where the wicks of the first candle and the second candle do not overlap at all. So right here is this imbalance area, this is that fair value gap. So this is a bullish fair value gap. Basically, the reason why this is a concept is because it means that price is going up so fast. It just shows displacement, it shows volume, and so that's what fair value gaps are for. It's price moving up in a direction so strongly that there is no other wicks here. It means like after this candle close, it just pushed all the way up, going past this wick, and even after that, in the next candle, price doesn't go back down. So that's why there's this gap here. So that's why it's called a fair value gap. A bearish example is here. There's 3 candles here. The wick of this one and the wick of this one doesn't overlap, so there's a gap here. That is a fair value gap. Basically, bearish fair value gaps are just when the gap right here is going down. So this wick and this wick is not touching, and this wick is above this wick. For a bullish one, this wick is above this wick. So we can see there's a bullish fair value gap here as well. So what fair value gaps can be used for is that they can be used as targets, they can be used as a way to get bias, they can be used as a way to look at the market structure, and they can be used as a higher time frame confluence. So that's why I personally really like using fair value gaps. So when we have market structure, right, refer back to the first video, and if you are completely new to this, then I suggest you guys watch the first video again after this. But when we were talking about market structure shifts and breakout structures in the first video, we tend to see fair value gaps here, bullish ones in bullish examples. Why? Because this shows displacement. Okay, let's just use one example. So when price pushes past above a high and it's a really strong close, it tends to leave fair value gaps like this, and then price tends to go back to these fair value gaps and then continue upwards. So that's what these fair value gaps are for. They're like basically an imbalance or a void where price will draw back into to continue going upwards from, or downwards if it's a bearish example. So that's what fair value gaps can be used for. So generally you want to use fair value gaps as an entry point when you're doing continuation trades, and when you're doing retracement trades where you're waiting for price to come back down, you can use fair value gaps as targets here for retracement trades. That's what they're used for. We'll now go through a few examples of just looking at them, and then we'll go over what is the difference between a strong and a weak one. There is a lot of fair value gaps. I have marked out a few. Here we can see a bearish fair value gap here. We react off it and then we continue downwards. Here we can see a bullish fair value gap here. We touch it and then we continue upwards. We can see a lot of fair value gaps here where price just goes straight up. You can see one here. That's where price reacted off of. You can see another one here. A bullish fair value gap. Price tapped into it and just continued upwards. We are now currently in a bullish fair value gap as well, but I'm actually not very bullish at the moment, just because on the 1 hour we have this bearish fair value gap here. So that's why I'm actually not very bullish at the moment. I'm actually more bearish, even though 4 hour is bullish because we're all the way up here. So when you get more advanced, you'll start to put together all these contexts and all these when we talked about premium and discount, right? It was in episode 3 or something. We talked about equilibrium. Right now we're in premium of this whole range. So that's why even though we're in a bullish fair value gap, I'm actually not really too bullish at the moment, because we have just started creating this 1 hour fair value gap, and we also have this 1 hour market structure shift here. So basically that is just a very small segment going over fair value gap examples. They should be pretty easy to spot because they're literally everywhere in the market on every single time frame. Your homework should be to just go and spot them. Look at how price reacts to fair value gaps, and look at how price respects or disrespects fair value gaps, and what happens after price respects or disrespects them. So that is a very simple homework there. Now, the next thing that we're going to talk about is just strong versus weak fair value gaps. Strong fair value gaps are basically areas where price is more likely to react off of. So they are the fair value gaps that actually disrespects other fair value gaps. They're in context with the higher time frame, and they create market structure shifts. So market structure shifts meaning it pushes past this. Let's say we have a bearish fair value gap here, let's say, and we have this bullish fair value gap here. If this bullish fair value gap disrespects this bearish one and it creates a market structure shift, then it is a strong fair value gap. But obviously in this case, as I just said, I'm not very bullish at the moment, just because we are all the way in premium. It is now Thursday. Price has been going all the way up, so I think the high of the week is in, and also just because we've created this bearish fair value gap. So these three are the requirements of a strong fair value gap. So here's an example of a strong fair value gap right here. So we can see right here, we were previously going up. We go down, we have this bullish fair value gap here, right? Price goes into this bullish fair value gap, goes all the way down, disrespects it. When we say disrespect, it just means it closes outside of it, just like an order block, right? It closed outside of this. So it disrespected this bullish fair value gap. And while disrespecting that, we created a bearish one. Then we create another one that disrespects it. So here we got a bullish one again. But the reason why this fair value gap is actually not that strong is because this fair value gap itself is not even bigger than this bearish one. Can you guys see? Just pay very close attention here, because this is a bit hard to see, but we have this bearish one here, right? Let's make all the bearish ones red so it's easier to see. Okay, so that's a bearish one. We disrespected that one with this bullish one. But this bullish one is not even bigger than the bearish one, so this is actually not that strong. Because one, this candle did close above it, but this fair value gap itself didn't fully disrespect this, so this is actually not strong. So we didn't get the first criteria of it disrespecting other fair value gaps. Is it in context with the higher time frame? Yes, because higher time frame wise we were still bullish, but did it create a market structure shift? No, because this fair value gap didn't close above this high. If this move closed all the way above that high and created a market structure shift, then this would be a strong fair value gap. Then we would expect the trend to continue upwards. Then we got this bearish one right here. We got this bearish fair value gap right here, and this is where we have our first strong fair value gap, because one, this red one fully disrespected this green one. Right, we closed all the way below it. This green one is literally inside it, and this green one is now fully disrespected. So we can get rid of that one. So we got the first criteria. We disrespect other fair value gaps. Now, this is just like a guide. It doesn't have to have all three, and there might be even other factors, but these are just the factors that I look for. So it fully disrespected that one. It is in context with the higher time frame, sort of, because we are overall very extended, and we're overall waiting for retracements into this leg right here, and even this whole leg right here. We're overall waiting for retracements, and we haven't had one this whole week. So it is kind of in context with the higher time frame, but I wouldn't really care too much about that at the moment. And the third one is just that it created a market structure shift here. We can see here this third candle closed below this low, so we have a market structure shift here, and that is why I was bearish today. Now this is a strong bearish fair value gap, so when it retraces into that, we want to see it respect, and that's what happened here as well. We went into it, we respected, and we continued downwards. So that's why personally I was bearish today. But personally I didn't really see much great trading setups, but we're not really looking at trading setups today. We're just looking at how to use fair value gaps to construct this story of the market. Now, Weak ones is the ones where it has been in many times. So for example, this one, a candle goes into it, instead of respecting it and continuing upwards, we go into it again, and it's just not creating something, you know. That is when it is weak. The more times something has been inside it, the more weak it becomes. So see here, like the candles were just chopping inside it. That means it's not very strong, because it means that it doesn't really want to respect it much, or it's not really creating a force. It's not creating a thing for price to go up. Here as well, we keep chopping inside it. We're still respecting it at the moment though, but we keep chopping inside it, and that's usually not a good sign. You usually want to see a strong fair value gap to have something like this, where we tap it once and we just go straight down, like this example that I showed before. And even these ones here, these bullish fair value gaps, and this one was one on 4 hour. Tap it into it once, just go straight up. This one we were inside it for a while, but yeah, there's sort of like different cases, but obviously it's just like an overall guide. One thing that makes a fair value gap weak is if it doesn't create a market structure shift, or if it doesn't create a new fair value gap. So what do I mean by new fair value gap? So this one, for example, here, this fair value gap went into it, and this move here created a new fair value gap. So that's what it means by creating a new fair value gap. But honestly, I don't really think this fair value gap is too strong, because it didn't create a market structure shift. But that's what it means by creating a new fair value gap. It's when you have one fair value gap, we go inside it, we push past it again, and we create another fair value gap. We want to use these fair value gaps for continuation trades a lot. I mean, at least for me, that's basically what they're for. See here as well, strong fair value gap. We go into it, tap into it once, go straight up. Okay, so that's what strong and weak fair value gaps are. This is how we can look at things on a higher time frame, right? So as we can see, we went down, right? But on a higher time frame, this was just a whole move up, a retracement, and it pushes back up, right? So if we refer to that, to the breakout structure video, this is a breakout structure, right? It's an uptrend, we retrace into it, and then now we continue upwards. We went up, retrace into the equilibrium, pushes up, breakout structure. That's so many concepts already, right? So anyways, we have this breakout structure here, and what happens was, this breakout structure, we have this fair value gaps form. So why do I think these are strong fair value gaps? It's because it created this breakout structure, right? When I say market structure shift, I mean market structure shift or breakout structure. Okay, so that's why these fair value gaps are strong fair value gaps. We got two here, we got one here, and we got one here. This one as well, it got respected. See, we respected right here. This fair value gap here, we tapped into it once, we went to it again. Respected it. Okay, but anyways, the reason why, okay, so anyways, let's just start from here and we'll just read through this story, okay? So overall, we were going up, we retraced, we pushed past, we got this breakout structure, we got two fair value gaps here, right? So now that we have two fair value gaps, what do I want to do? I want to go down to the lower time frames to see whether we want to continue upwards from these fair value gaps, right? So these are the two fair value gaps here, and we want to go down to the lower time frames to see how price is reacting of them. We pushed past it, and then we created this 4-hour bearish fair value gap here. After we push past this, we have these two strong fair value gaps. We also have this bearish fair value gap form, right? So we already respected this here, we push past it, and then we come back down, creating this bearish fair value gap. Now this technically didn't really have a market structure shift, nor did it disrespect any fair value gap, so technically it would be considered a weak. But remember, this is only a retracement one, right? Because we're not looking for this fair value gap to push it all the way down. We just want this fair value gap to hold it enough to trade back down into this fair value gap. Do you see where I'm going with this? We push past this, it is a bullish trend, but that whole leg there was just a retracement leg. So with this retracement, you want to see fair value gaps here, and this is now our mini downtrend. What happened was, we have this bearish fair value gap, we trade into it, and then we continue downwards, targeting this 4-hour fair value gap. And that's how I use this 4-hour fair value gap as a target, and this as a zone to trade into it. I had a short here actually on that day. And something you want to take note of as well is, see how this didn't take out this low? We didn't close below this low at all. It's a liquidity sweep. So that's from episode 2. Swept this low as a liquidity sweep, tapping into the H4 fair value gap and then continuing upwards. So that's how I know that it just wants to continue going upwards. But basically how I formed the trade was just we have that 4-hour fair value gap there as my higher time frame confluence, and overall we already had a break of structure. So overall on the big time frame I'm still bullish, but given this H4 fair value gap, I want to see it come back into this fair value gap before going up, because it usually doesn't, unless it's a really strong trend, it usually likes to come back to a fair value gap before continuing upwards. Price would very unlikely just do this and just do that and just move up like that, right? If it wants to go up, it would have to come back to this fair value gap to continue upwards, or if it wants to go down, obviously it will just push through this fair value gap. So either way, this is a good target. And with this H4 bearish fair value gap forming, there's even more confirmation that it wants to come back down to this fair value gap before pushing upwards. And see how this is also in discount of the range before going upwards. That is how we can start to form trades. So that's just something that I wanted to show you guys there. That was a good example. But this happens literally everywhere in the market. So you guys can see as well, studying this past week's price action, it was really fully just making so many fair value gaps. And honestly, see here, we've got I've already gone through these examples, but yeah, see how all these past weeks we've got all these fair value gaps as well. It just shows that we have bullish intention. And sometimes you want to pay attention to whether we also don't create a fair value gap. Even a lack of creation of a fair value gap is something to take note of as well, because that might mean that price is not showing displacement, right? Fair value gaps are used to show displacement here. The first line that I wrote, right? Fair value gap shows displacement, and fair value gap shows market structure shifts and bullish and break of structures, and they create them. And that's why I try to just focus mainly on those that create market structure shifts and break of structures. Now it leads me to talking about mistakes. Since these fair value gaps are literally everywhere, when I was first starting out, I used to just look at any fair value gap and just want to trade off of them. This is a bearish fair value gap, so I want to short. I mean, that ended up being valid because there was a whole story there, but see how this is a bearish fair value gap and we just ran through it? Why? Leave in the comments below why did we just go through this. I hope you got the answer. It was because we got this bullish fair value gap, right? As we were talking about before, the overall higher context, remember, was bullish, right? So when we come back to this and tap into this bullish fair value gap, we would probably expect this to get taken out. So this is an example of a weak one, because this fair value gap is weak. Why? Because it didn't create a market structure shift. Remember here, it didn't create a market structure shift. That's the first sign. So when we are over here, price is trading, right? So when price is trading over here, we create this bearish fair value gap. Do we expect it to hold? Do we want to look for shorts here when price goes back up here? No, because we just reacted off a bullish one. So why would we be looking for shorts here? And another thing is, did price close below this line? No, it was just a liquidity sweep. It wasn't a market structure shift. Since it's just a liquidity sweep, I wouldn't really be looking for this fair value gap to hold, because this fair value gap is now weak because it didn't close. If we got this close here, then maybe I would look for a potential short here. Maybe it means that we might want to disrespect this a little bit more if we got like a close. But we can see here it was not close. We tapped into it and just went straight up. Another sign that it was weak was when we start chopping around inside it. We went into it and we have so many candles inside it, and that just shows that it doesn't really want to respect it. So when we're around here, I wouldn't be looking too much for shorts anymore. The first sign of not looking for shorts, of course, being this not being a market structure shift. So that's an example there of a weak fair value gap. Now, definitely a mistake is just looking at these. Oh yes, I was talking about mistakes. So mistakes are just looking at random fair value gaps and trading off of them. Make sure the fair value gaps that you're looking at are in contact with the higher time frames. Okay, even this one is a fair value gap where we trade into it, we reject off of it, but we still end up pushing past it. So nothing is a standalone concept. We can't just be looking at fair value gaps and seeing, you can't just be looking at this, seeing the fact that this didn't play out, this didn't break past this low or whatever, and just saying, oh, this is a strong fair value gap because we have this market structure shift, yet this fair value gap got disrespected. You can't just be looking at the markets with just one concept. So with that, fair value gaps is also not the holy grail, even though this is the longest video and this is the concept that I use the most. It is definitely not the only concept that I use. You have to still use the higher time frame. You have to still put everything together. Here's another example. We have a market structure shifts here. Fair value gap, tapped into it, and we continue downwards. So here's an example where I did catch the short. 31st of July. We got this fair value gap here. And we have this market structure shift here, which makes this fair value gap strong. We tap into it and we sell off. So that's an example of where I actually caught it here. I think there's not much else. I hope that this explains it well, but definitely check out other videos of fair value gaps. It's just a pretty condensed video about everything that I use and everything that I think of when I use fair value gaps. Definitely go and study this. I'll see you guys in the next video. Bye.